Speaking of BlackRock and iShares, she's co-head of iShares Markets and Investments. Thanks for joining us.
Thank you.
You've been a partner in this project.
Yes.
Does this fill a need for you? Tell us why why iShares decided to sign on to this project.
Well, investors want to trade bond ETFs. And what's really happened over the last 2 years, I mean, what's a bond ETF? A bond ETF is a portfolio of bonds that trades like a stock on the stock exchange. Trading in bond ETFs from 2017 to 2018 was up 40%. It's actually up another 40% this year. So what's happening is lots of asset managers seek to meet the demand of investors to participate in bond ETFs. They're creating a bunch of, like, you can think of it as like local access roads to create and redeem bond ETFs. What the hub is doing, and it's really a market utility that has never existed before, is it's creating a highway to facilitate the manufacturing process for bond ETFs.
I like that phrase, a highway to facilitate the manufacturing
That's really
process.
what it is.
Yeah, that's a good metaphor for people to understand what's going on here. I love bond ETFs because
Me too.
ETFs for bonds are finally starting to bring the bond market into the 21st century. It's one of the great, amazing things to me that a good part of the bond market is still over the counter, where you can have very wide bid and ask spreads. The bond market can be electronified, just like the stock market has been, and yet it's not, because it's a major profit center for a lot of the people who are in that particular business. But bond ETFs are making inroads into that, right? They're forcing more electronification. Am I right?
That's exactly right, and it's fascinating. And to your point, most people are surprised when they hear that the bond market still trades largely over the counter, because they think, like, technology has changed so many other facets of my life. Why has the bond market been so resistant? Well, you explained why the bond market has been so resistant. However, the demand for bond ETFs is really forcing the electronification of the bond market, because you can't trade a big portfolio, and some of these ETFs have thousands of bonds. You can't trade that by voice or over the phone. So you need electronic systems, and that has actually facilitated a huge change in the bond market broadly.
You're a veteran of the ETF business. I've watched this grow just like you have, and yet the ETF business is still, what, 10% of the assets under management of the U.S. stock market, essentially?
The stock market, 9 or 10%.
Yeah, $3 trillion maybe?
But less than 1% of the bond market.
Yeah.
So there is a lot of room to run when it comes to bond ETFs.
What's going to move more money into ETFs? We've had a lot of discussions on ETF Edge about non-transparent ETFs, for example, as a major issue. Active fund managers moving from a mutual fund platform to an ETF platform. That seems to be a very big theme for 2020. Do you think that will drive further growth in the ETF business?
Look, ultimately, I think ETFs are a technology that investors are increasingly embracing to access the markets however they want to access the markets, whether it's bond market access, equity market access, how they want to access equity markets. Is that index-based? Is that factor strategies? Is that other types of strategies? To your point, there's a really interesting question right now about active strategies. The question being also transparent active or non-transparent active. I do think an expectation that investors have with ETFs right now is transparency to underlying portfolio.
Yeah, I think non-transparent ETFs are going to drive additional growth. My only criticism of that is, if you're a lousy active manager in a mutual fund wrapper, you're going to be a lousy active manager in an ETF wrapper.
Right.
It's not going to solve any problems ultimately. Although for the best ones that are out there, lower fees, that could really help people out and drive even more people into that area. So I think there's good about this, as long as people understand what's going on.
Yeah, agreed with you. If you have if you have a value proposition for the end investor, the ETF wrapper can be a powerful technology to deliver it.
Let me just ask you in conclusion about ESGs, environmental, social, and governance. Been kind of slow in the United States, picking up rather dramatically over in Europe, but this year it finally seems to be bubbling up a little bit. iShares has some very important products for the ESG space. What's driving that now, and why is it starting to finally pick up?
I think, to your point, there's been a real desire by investors in the U.S., and this has been there longer in Europe, to combine their investing with their beliefs, and investors are becoming educated in what that means for them, because ESG can mean lots of different things, but we are seeing a real hunger from the U.S. investor. And look, this is true for myself as an investor, to really see what that looks like and how to commit to it going forward.
Well, I look forward to hearing more about it in 2020. I think it's an area, and I have been noting for years that it's been very slow to pick up that ESG space. Everyone loves it. Who's not in favor of environmental, social, and governance issues? And yet, where's the money? I keep saying, and it's finally starting to pick up a little bit. Samara Cohen, thanks very much from iShares and BlackRock joining us here. And that's it. ETF Edge watchers, of course, the regular show coming up on Monday, and we look forward to seeing you all at that time. Everybody have a healthy, happy, and safe evening.